Hello again, just over my shoulder is the Bank of England, and the latest minutes from the central bank show that QE is back on the table. I've been to Accendo Markets to discuss the minutes with Mike van Dulken. So the big headline from the Bank of England meeting minutes is that it seems that QE is back on the table.
Potentially, yeah. A big shift in the vote from 8-1 to 6-3. Last time we saw 6-3, we did actually see a full reversal to 7-2 in favour of more QE last time. So I think there is potential there. I don't quite think it'll be next month. We still need a majority for that to come through, but it's certainly a big shift. Obviously, more people warranting more asset purchases, including the governor himself. Many people talking about whether he could be after a last hurrah before Mr. Carney takes residence. I don't think it's as much a case of that, because he still needs to be part of a consensus decision. In addition, there was still a 9-0 vote that any maturing assets would still be reinvested. I believe that makes up 6 to 7 billion, which, if we're looking at a call for another 25, it's actually a fair contribution. So that may well hold things off for a little while longer. But obviously, they're seeing the environment as needing maybe a little nudge. So yeah, back on the table as soon as next month. Unlikely.
I'm wondering what the main consideration for it is, because Mervyn King's been a bit sunnier in his outlook recently, talking about the light at the end of the tunnel. But again, this is sounding a little bit desperate almost.
That tunnel has been a very, very long tunnel. I mean, if we look at the inflation target, I'm afraid I think that was missed. I believe that's the 38th month in a row. I mean, we're talking longer than 3 years. So I believe that's been taken with a real pinch of salt. The real crux or the dislocation, if you like, a bit like unemployment and growth at the moment, is also between the growth and the sentiment things we're seeing. But also the inflation outlook is still pretty dire. We're well above inflation that's been pushed out further yet again, as it has been done month after month. And yet growth is still being hampered. The worries are that carries on for so much longer. So I think he'll be out of office before we get any improvement whatsoever in the inflation outlook. Consumers still being squeezed extremely tightly. I think yesterday's wage cost figures were lower, showing the squeeze, and then today's unemployment figures, a slight tick up in the rates, but the claims were lower. Maybe just a statistics element, seasonality there, but the good figure was 150,000 net job ads over the last 3 months. It's good to see. Yeah,
the market impact of this is FTSE's been pushed above 6,400, and it seems that exporters are doing especially well because the pound's weakened on the back of this announcement or statement.
Yeah, I mean it comes back to this currency wars thing and talking down currencies. The vote had an impact on sterling, because the prospect of more QE implies more printing to buy more assets. That has benefited the exporters. Whether that is classed as talking down the currency, I don't think so. It's a vote. It's a monthly thing. It's as expected. And as I said, I don't think we should expect anything imminently next month. Exporters doing well. As you say, FTSE above 6,400. There's a big undertone of optimism there. We've been driving since last summer, since Draghi put a floor under things, said I'll do whatever's necessary. But also don't forget, with the FTSE, there's so much of the index is involved with companies which have very little to do with the UK.
Yeah.
The mining sector, things like that. They've had a great rally, 35-40% some of them in the last 6 months. So there's a lot of optimism out there. People seem to be looking through the fog, if you like, to maybe Mervyn's light at the end of the tunnel.
Yeah, but doesn't this feed into an idea that we're due a big correction? Because you're right that optimism's high, but the real economic figures still aren't great.
No, I mean, when you've got GDP which surprises very much to the downside, as we saw last month, things aren't great. But as I said, people seem to be looking through that. They're less interested in the backward-looking data and confirmation that things have been bad. They want to look forward to, where can things go? I mean, hence why we've seen this big rotation, supposed great rotation from fixed income and bonds and low-yielding assets into the riskier, higher high yielding things. So the optimism there, I've been burnt several times recently calling for a correction. It's not materialised, or it's been far more tepid than expected. I did wonder whether the 6,400 would hold up as a bit of a sideways correction straight through it. Whether we get a decisive breach, I still need to see a good breach of it to maybe jump on board. But what's maybe worth looking at now is what's above the 6,400, and that takes us back to the pre-crisis highs of I think just shy of 6,800.
Sure. Let's quickly focus on the unemployment numbers. Again, they came in pretty okay. The ILO unemployment rate ticked back up to 7.8. The claims rate ticked up a touch as well. I don't think there's anything to be too worried about there. The real focus is probably that net job ads of 150,000 over the last 3 months. But if anything, the MPC minutes took the limelight there from the unemployment. Well, that's all for the moment. My next interview will be with Miles Eakers from Savvy Trading, and we'll be discussing currencies. But for now, goodbye.